So, folks, welcome to our market update for January 29th, 2024. It's the end of January. It's the end of the week. It's the end of the month. And if you have been following me on these market updates, I've been talking a lot in January of so goes the week, so goes the month. So the week of January was mainly an up week. And so if your first week of January is up, then more than likely the month of January is going to be up. If the month of January is up, then more than likely we're going to have an up year. And that's what we're going to talk about today. And if that is true, we're also in an election year. That's typically a double-digit year to the upside. You also have not only that, trend is up. We see a lot of seasonality up as well. Let's get right to it. What you're looking at right now on the screen is a chart of the SPY. So SPY, and you can see here, this is a 75-day chart. This is what I'm going to work with here during our market update. So as you can see, the lows in the last 75 days and the highs are pretty much hitting right now. So that shows you we've got multi-month highs. With the SPY, we've got yearly highs, we've got all-time highs that we're sitting on right now as we're just we're in the high 480s. All right, so what you see on my screen is I've got a candlestick chart, mostly green, and hence why the market's up so high is because we just get this follow through day after day. But you're also seeing a bunch of horizontal lines. This is the Fibonacci chart. As you can see, we're looking for potentially a pullback to happen, but right now that's not happening. Great for long traders. The other thing that you see on the screen is the blue line. That blue line represents the 30 to 60 day at the money options. So what this does is this just tells me where options are in terms of time premium. So to give you an idea, back in at the end of October of last year, this blue line was near the high side of this chart. This meant that the options back in October were expensive, right? People were paying a lot for time premium then. Relative to where they are now, it's dropped down and it's remained low for several months as this market's moved higher. Now, we've not dipped into any new lows, which tells me that guess what? We still have room to run for the overall stock market. Now, remember, a Four Corners update, we look at stocks, bonds, currencies, and commodities. So we're going to look at those. And this week, what I want to do is I want to show you the big stocks that are in the news. And I'm betting you know which ones I'm talking about. So we're going to end on those. Here we go. So moving on to TLT. Here's something that has a little bit more detail in it and can be cause for a little bit more commentary. Lows on TLT, we're back at the end of October, are just below 83. This is when interest rates were actually at their highest. And I believe we saw 10-year bonds touching 5% at one time here. And since then, we've seen 82 and change go all the way up to 100 and a half, 100.52. And so what happens is as this particular instrument scales up, this is the 20-year Treasury bond ETF. This means rates are going down. Now, we've had a pullback since the end of December, and we've gone from 100.52. We pulled back down into really the low 90s. 93.77 was the high coming into this, or was the close coming into this week. But it's also come into a really interesting area. This is a 38% pullback. This is where Fibonacci starts to make sense to me, right? When we snap that low back here at 82.77 and the high at 100.52, we're able to get three areas of what we call pullback support. The 38% area you see here on the screen, 93.74, the 50% area, 91.65, 61% area, 89.55. These are all support levels. And it looks like we're holding some very interesting support right here around the 93.74 area. All right. So what this is telling me is that we have an uprun in bonds. We're looking for a pullback area. Now, the strong part of pullback is going to be between 91.65 and 93.74. And so for those of you that have a reason that maybe you want to be long bonds, the area we're at right now might make a good reason to get long bonds. Okay, moving on to cash. Now, this is going to look like a lot of the opposite of bonds, where we're seeing a downtrend that's happened from the end of October to the end of December, and we're having a pull up in UUP. UUP is the US dollar, the double dollar index. This is an index that trades the US dollar against a basket of foreign currencies. And as you can see here, the US dollar got weak over the final quarter of 2023, getting a little bit of strength here. But again, what it looks like is that this is a pause before we may go down and double dip to the bottom. Now, if cash goes down, that's good for stocks, that's good for currencies, foreign currencies, and it's also good for commodities. And so we'll get into the commodities here next. So the commodities that I like to look at are things like USO, gold, etc. We're going to take a look at USO here. And USO is the United States Oil ETF. Now, oil has not been moving with the stock market. It really didn't move with the stock market to the end of the year because oil, as you can see, USO went from around 81.68 down to as low as 64.25. But in the last couple of weeks, it's kind of ran back up again. The interesting part that I'm looking at here is that we've gone from this high to this low. We're at a 50% retracement right now, all right, at $72.97. Is this going to hold? And if it does that mean oil is going to double dip back down? Or are we going to crush through this? And is oil and oil stocks, are they going to start moving with the stock market? Now, I believe that the latter is likely to happen, that oil and oil stocks are likely going to start moving with the stock market. And here's why. Number one, oil stocks and the stock market have been moving apart. That typically doesn't last for very long, right? So that's the first thing. There are some supply concerns. If you look at what's going on in DC, they're doing it with natural gas, where they're putting a hold on any exports in LNG. But as the Biden administration is looking at potential climate issues, but what I like to look at is I don't like to put all of my eggs into what Washington is doing or what's newsy right now, right? As a pattern trader, what I like to do is I like to look at patterns, and we're coming into, and it's a couple of weeks away, but we're coming into the bullish seasonality pattern for oil and oil stocks. And so to me, getting above $75 on USO makes a great case for a bullish year in oil. All right, so that's my thoughts there. Okay, so that takes us through stocks, bonds, currencies, commodities. Let's talk about the big stocks that are in the news this week. Now, the reason I'm bringing these up is because these all have earnings, and there's 5 of them I want to look at right now. So the first one we're looking at is Google, right? This is Alphabet, has earnings on the January 30th after market close. Google also is hitting new multi-month highs back up here above 152. And what's interesting is that Google is not in the sensational 6 or the magnificent 7, whatever we're calling it these days, but it's quietly making a move to the upside. It blew out of last quarter's earnings when the stock was trading around 140. Right now it's at 152. And the other thing that's interesting too is that if you take a look at the implied volatility on Google, it's not spiking the new highs, which means guess what? This one too might have a run that could continue through earnings. Take a look at the next one is Microsoft, also announcing on 30th after market close. Some big stuff going on this week. This is the biggest week of the earnings quarter. That's why I'm bringing this up with you this week. Microsoft, if you look at the last 3 months, you're seeing lows in around 330. Highs are just kicking off of the 400s right now. And again, Microsoft has earnings coming up this week. Implied volatility levels are suggesting otherwise. They're not spiking either like they were in the last quarter. So again, and of course, the big push with Microsoft is AI, right? Big push of Microsoft is AI. It's funny, I was watching an interview with Elon Musk, and he was talking about how he was one of the founders of OpenAI, And now he's concerned that it's gone from nonprofit to for-profit. I mean, this was gonna happen. This is the probably one of the biggest things of my lifetime, if not the biggest thing, at least for now. And so why wouldn't the for-profit companies get involved in it? Microsoft looks like a big benefactor of AI, and their stock price is showing that new all-time highs. Apple. Here's the one that's a little bit tricky because if you look at Apple, Apple had earnings that came out last quarter. The stock was trading around 175, 176. It hit a high of 198.11, but that was back in December. Since then, it has stumbled back in the low 180s. It came back up again, but as recently in the last few days ahead of its earnings, has fallen a bit, trading around the low 190s. Apple's earnings are coming out on the afternoon of February 1st. Again, Apple, just like the other two, the implied volatilities on Apple are nowhere near where they were. So it's interesting when you look at these, you'd think typically, you go into earnings and you think option traders are selling, selling, selling. It doesn't seem to be the case right now. If you're an option trader and you are directionally bullish or bearish, stocks like these, the best bet, because we're in a Goldilocks situation. Options are not cheap, relatively cheap, and they're not relatively expensive. So there's going to be a lot of spreading going on with stocks like Microsoft, Google, Apple, et cetera. And of course, this next one, which is Amazon, they also announced earnings the afternoon of February 1st. They also are hitting new all-time highs. They also are in the Goldilocks area with options trades as well. So when you add all that up and you take a look at the final of these, which is Meta. Meta's announcing the afternoon of the second too. What do we see? We see a lot of these big stocks with new all-time highs or very close to all-time highs, volatility not screaming to the upside, and trends are up, seasonality is up. Folks are looking at these saying, are they overdone? And in an average market, you would say yes, but this is not an average market. This is a market where we're in an election year. This is a market where we're sliding into seasonality, even if for the next quarter. And this is a market where volatility is telling us that there is more upside to be continued. Meta is just really a repeat of most of these stocks. Finally, let's take a look at this. As you've got the VIX here, and the VIX has had a tumble since October when we were this is VXX, the VIX futures 2708. Look where we are right now. We are down almost 50% on VXX inside of one quarter. So if you add it all up, if you're looking at stocks, bonds, and commodities, basically USO, you can see here that that we are really kind of in that Goldilocks era as we enter the month of February.